Welcome back. You're still tuned into Halftime Report, where let's continue the chemical industry discussion with Harshvardhan Goenka, who's the ED Strategy and Business Development at Lakshmi Organic Industry. Harsh, good afternoon. Thank you so much for joining us. Well, there's been a lot of chatter around EU+1 theme. We've been talking about what's the disruptions that have happened in Europe as well. Is this something that has converted into a better opportunity for India as well? And what about the export outlook? Because May export numbers did not look so good for the industry.
Hi, Sonal. Thanks for having me. Europe+1 has been a big theme for quite some time, and opportunities have existed earlier and continue to exist today. The question is, how will the Indian chemical industry play that? Are we going to look at value chains, creating something like China did, going through that curve is something I believe that will happen and will remain in the industry for the years to come. On your second part, which is export, I think there's enough chatter about China demand erosion today and this demand-supply balance being skewed. We will continue to see that. And while there are pockets of the domestic industry still remaining robust, overall the picture globally today is seeming like the supply chains are getting destocked. We are primarily seeing that.
Okay, so there is an issue that we are seeing with the global markets. Do you think calendar year 2023 will continue to see some pressure here?
So specifically in agrochemicals, we are seeing that this year, calendar year, will remain difficult. It just depends on how quickly the other markets will rebound, and China will remain an important player. They're more than 40% of the global chemical market. So they will definitely be the primary trigger which we'll be looking out for.
Okay, all right. So when we say what happens in China will be the key trigger to go to watch out for, generally, are you seeing that, say, in calendar year 23 or 24, there is still a wait and watch mode that the Indian chemical industry is standing at? And what about the newer chemistries, be it in the semiconductor chain, lithium ion cells? Is that something where the industry is focusing on?
Okay. So Sonal, Indian chemical industry is at quite a pivot point. We cannot stop capex today just because of a short thing that's going on this year and this quarter. The overall macroeconomic growth and structural shift to India and reason to manufacture in India is adequate. Capexes will continue from all companies, irrespective of what goes on in the immediate short term, because there is reason for India to play in the global market much more than what it has historically. So we will see that continue. And on your, sorry, what is the second question? I missed that.
I just wanted to understand how is pricing scenario working out? Because of more dumping that's coming from China, we are seeing it being dumped at lower prices globally. Is that impacting prices in the commodity chemical space?
So you have seen commodity prices peak, I think, towards the end of COVID, and that has continued to decline. We are seeing still slight decline in commodities still going on, and I believe that will continue, though we are in the last quartile. You're reaching quite low points of the cost curves, so there is not that much room to go from now.
Okay, all right. Fluorination, that has been a big opportunity. Everyone's been talking about that. Indian companies have actually outperformed Chinese players. You are looking at this chemistry as well. What is the outlook here? Will you be spending more? Will it be a bigger pie for you as well?
So, yes, fluorine has been a hot topic for the Indian chemical industry. You're seeing a lot of players wanting to come in and take a part of the pie. The value chain in which each one plays is very important. Chinese have been the largest fluorochemical players in the world, while though a lot of the innovation has remained in the Western Hemisphere, and that has moved to China over the period, you will see that happen in India as well. And India, like us, like our company as well, will invest. The question is what part of the technology, what part of the value chain will the players in India choose to play within this space? That is what we should define very clearly and not just land up making Me Too products, which then will just skew demand-supply balances.
Okay, all right, Harshvardhan, it was a pleasure speaking with you. Some more news to address, otherwise it would have been a longer conversation. Thanks a lot. So that's the word coming in from Laxmi Organic Industries. The agrochemical part of the industry not doing so well, and China factor is something that the industry is watching out for as well. Time for a break. On the other side, we'll connect with Prashant Pitti, who's the co-founder Easy Trip Planners, to discuss the new TCS norms and the block deal on the stock as well. Stay tuned.